Welcome back for my final daily report markets analysis video on Friday the 13th of March with me, Richard Perry, market analyst at Hantec. Looking at this gold chart and the concern that we had throughout the run higher and the recent just slip back was that the market would come under significant selling pressure once again through margin calls. And that was exactly what happened yesterday. The massive sell-off that we saw on equities really did infect into the gold market, and gold fell inexplicably. You would imagine on a massive down day for equities, gold fell enormously. High-low range of, wow, $90. And it was really a move that I think is very similar to the one that we saw on the 28th of March, really, where that was confirmed as being margin call driven through the gold futures market. And subsequently, gold prices started, as the markets calmed down after the 28th of Feb, markets calmed down, and then the gold price started to rally again, as we see that it started to pick up again today. And we're perfectly open to the fact that that could well be seen again, where gold starts to rally again, because on a medium to longer term basis we still see the outlook for gold being very strong. We see the technicals essentially still pretty strongly configured. Yeah, you've got that near term corrective slip going on still through the MACD and stochastics, but essentially with that rebound and the support coming in today, markets are getting back on to a more even keel today, and gold's 0.5% odd higher, so $10 higher. So it's very similar to move to what I think we saw on the reaction on the 2nd of March. So essentially we still see that I think gold is a buy into weakness. You've broken that uptrend, but to be honest, I think it's you've got so much volatility flying around that essentially I think gold will still be very volatile play, but I think on a medium-term basis it remains a pretty good proposition at this sort of stage and this sort of level for gold to see further moves higher again in due course. So the reaction highs that we're looking out for today, obviously today's initial rebound highs 1593, but that 38.2% fib level I'd be interested in, 1604, and subsequently the 1611 level as well, which has been a bit of a pivot line. But you can see here on the hourly chart, 1606 was yesterday's reaction high before falling into the close, but essentially the market's starting to find a bit of support. If you see the RSI in the 60s, if you see the MACD, this is on the hourly chart by the way, if you see the MACD lines above neutral, hourly RSI above 60, all conditions that you would say that the bulls are getting back on track and ready to go again. So those are the sort of signals that I'd be looking out for. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign on for our webinars.